Welcome to everyone. This week's video will cover the US dollar for the week of August 7, 2023. Before we start, make sure you read carefully the disclaimer. To trade the US dollar, I personally like the following ETF: DLR directly in the US dollar, or for the Canadian trader, there is an hedged version in the Canadian dollar, DLR30O. And since March 2023, this ETF pays quarterly dividends. As you can see, the DLR ETF follows very well the US dollar index. Let's start with the overall picture. This represents a very long-term picture of the US dollar. Since the major low in 2008, which can be the 15 or 18 month years low, the US dollar trades in an uptrend channel. But the last important lows in which we are interested in are the January 2021 low and the May 2022. There is a high probability the 2021 low was a 54-month cycle low. In this case, in 2021, we start a new 54-month cycle. To complete a 54-month cycle, we need a 18-month cycle. We had the first one complete in May 2022 at 101.76, and we are currently in the last leg of the second 18 months, which is scheduled to end in September 2023. Let's start now with the shorter term. The 10 days cycle. The last short-term important low was on July 14 at 99.58. Since this low, we completed two 10-day cycles. The last one was on July 31st, and the current one is scheduled to end this week, Monday or Tuesday. On July 19, the market crossed above the cycle line at 100 for a potential target at 100.90. The next day, with a high of 197, the market met its target. Since the July 14 was an important short-term low, it is not uncommon the market keep moving up after meeting its target. The success rate for the 10-day cycle is 94%. The success rate measures how many times the market meets its target after providing a potential target on the upside or downside within 1% margin of error as a limit. The 20-day cycle. Since in the 20-day cycle there is two 10-day cycles, the first 20-day cycle since the July 14, 2023's low was on the July 31st. On the July 24th, the market crossed above the cycle line at 101.06 for a potential target at 102.74. On August 2nd, the market reached its target with a high of 102.84. The success rate for the 20-day cycle is 100%. This 20-day cycle is scheduled to end on August 17, the yellow zone on the chart. There is a high probability the market will cross below its cycle line, providing a downside target for the August 17. Here are the support line and the potential targets if the market crosses below its cycle line this week. The 40 days cycle. This is the first 40-day cycle since the July 14 low. On the July 28 and August 1st, the market crossed above the cycle line at 101.40 and 101.80, providing an upside potential target zone between 103.22 and 104.02. With a high at 102.84 on August 3rd, the market meets its target by only 38 cents, or 0.37%. The target is considered as met. But until the market crosses back below its cycle lines, the target is still valid. The success rate for the 40-day cycle is 100% for this year. This 40-day cycle is scheduled to end on August 17, and may find a support on its cycle lines, which are for the August 17 between 102.14 and 101.70. But since there is more bearishness in this market than expected, there is a probability the US dollar crosses below its cycle line, providing a downside target. Here the potential target is this week the US dollar crosses below its support line, but it is very unlikely this will happen this week. The 80-day cycle. The July 14 low was the first 80-day cycle since the last 20-week cycle low on May 2023. The cycle was bearish since its end below where it started, so we can expect the present 80-day cycle bearish too until the September 20 date in which it's supposed to end. This 80-day cycle should use its cycle line as a resistance and should test the previous low at 99.58. The last time this year the US dollar crossed its cycle line was on the downside on June 15 and 21st at 102.49 and 102, providing a downside target zone between 129 and 121. With the low at 99.58 on July 14, the target has been met. The success rate for this cycle is 75%. Soon we have the 40-day cycle low confirmation. I will draw a trend line. When the market will cross below this trend line, this will confirm the 80-day cycle peak is in formation. If this peak occurs on the left side of the cycle, left translation, this will be very bearish. The 20 weeks cycle. The last 20-week cycle occurred on May 8, 2023. This was the third 20-week cycle. We need one more 20-week cycle to complete the whole 18-month cycle since the May 2022 low. So we start the fourth and the last 20-week cycle on May 8, 2023. Since that, the market crossed above the cycle line on May 29 at 103.80 for a potential target at 106.82. On July 7, the market crossed back below its cycle line without meeting its target and in the same time invalidating this target. What does that mean? In this case, it doesn't mean the signals are no good. It means there is a lot of bearishness in the market. The crossing on the downside occurred at 101.72, providing a downside target at 98.74. With the low at 99.58, the target has been met since it's been missing by only 84 cents or 0.85%. But the target is still valid until the market crosses back above the cycle line. The success rate for the 20-week cycle this year is 50%. What's next? The market should use its cycle line as a resistance and resume its last decline to form the major low. The 40 weeks cycle. There is a 2 40 weeks cycle in one 18-month cycle. The first 40 weeks cycle ends during the first week of February 2023. The second and the last one is expected for the end of September in the yellow zone on the chart. The last week of May, the market crossed above the cycle line at 103.87 for a potential target at 106.96. Since there is a lot of bearishness, the market crossed back below its cycle line, invalidating the upside potential target. The market should use its cycle line as a resistance before the next decline. The success rate for the 40-week cycle for this year is 0%. It never meets its target since we have only one signal. The 18-month cycle. As said at the beginning of this video, we are in the second 18-month cycle since the 2021 major low. This 18-month cycle is bearish to neutral since for now it's at the same level than where it started. In March 2023, the US dollar crossed below its cycle line, confirming the bearishness of the market. The crossing occurred at 101.93, providing a potential target at 89.08, and time-wise, the low expected by the end of September. Because the principle on synchronicity, the September low should be an important low since the 10-day, 20-day, 40-day, 80-day, 20 weeks, 40 weeks, and 18-month cycles end all at the same time. Is the 89.08 target will be met? We have to be ready for, but if the target is not met, then it will be a bullish sign for the next 18-month cycle. And if it met, the target it will be expected. But personally, I do not expect this target to be met. The market should at least test the last low at 99.58. Don't forget, if you like this video, click on the like button, subscribe, and click on the bell to make sure you don't miss the next video update. In conclusion, the trend is done until the end of September, where a major low should occur. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.